and welcome to Value Alchemy Lab. Have you ever wondered why, in the chaos of financial markets, some people seem able to navigate every cycle and remain standing? Have you ever felt lost, anxious, or even doubtful of your own judgment because of constant market swings? Today, we're taking you inside the mind of an investment titan, someone who spent a lifetime developing a set of principles that reveal how to evolve through uncertainty. His name is Ray Dalio, founder of Bridgewater Associates. Ray Dalio, often called the Steve Jobs of investing, has created ideas that go far beyond finance. His thinking forms a universal philosophy about life, work, and decision-making. He once said, "Pain plus reflection equals progress." These simple words capture the core wisdom of his career, what we might call his theory of evolution through pain. So what exactly is this theory? And how does it challenge our traditional understanding of investing and even of life itself? Here at Value Alchemy Lab, we'll dive deep into Dalio's evolution through pain and the critical decision-making models behind it. We'll explore why embracing reality matters far more than trying to predict the market. Imagine evolution as climbing a mountain. Every fall, every loose rock beneath your feet represents pain and setback. But it's precisely this pain that forces us to stop, reflect, search for a better path, and grow stronger as we move closer to the summit. This is Dalio's evolution through pain. He believes pain is a signal of progress, your brain telling you, there's a problem here, you need to change. In investing, this pain may come from a wrong decision, a major loss, or expectations that completely collapse. Most people instinctively avoid or deny pain. Dalio does the opposite. He urges us to embrace pain as a valuable learning opportunity. He sees it as a form of natural selection. Each failure eliminates strategies and ways of thinking that don't align with reality. Only by facing pain directly and dissecting it can we extract the principles that guide better decisions in the future. So how does this connect to embracing reality? Dalio recognized a fundamental human impulse, our desire to predict the future. We crave prediction because it promises control over uncertainty. But markets are complex, filled with nonlinearity and randomness. No one can accurately predict the future. Trying to predict markets is like using a broken crystal ball. It only traps us in illusion. Dalio's insight is simple. Instead of wasting energy on what cannot be predicted, invest that energy in embracing reality. What does that mean? It means seeing the world as it truly is, not as we wish it to be. It means acknowledging our ignorance and the complexity of markets and constantly adjusting our understanding and strategies based on reality. Embracing reality is the foundation of evolution through pain. It requires us to set aside ego and bias and face the truth with humility. Only then can pain become a teacher rather than a force that breaks us. Embracing reality isn't easy. It requires a rigorous decision-making framework. Inside Bridgewater, Dalio built a unique system known as credibility-weighted decision-making. Its goal is to overcome human bias and emotion and produce objective, rational decisions. The core idea is simple. Not all opinions are equally valuable. When making decisions, we should give more weight to people with higher credibility. Who qualifies as highly credible? Dalio defined two criteria. First, they've successfully done something similar at least 3 times. Second, they can clearly explain the logic behind their conclusions. At Bridgewater, major decisions gather many viewpoints, but the final outcome isn't a simple average. Opinions are weighted by credibility, like an intelligence scale that automatically adjusts its balance. This system avoids both blind majority rule and autocratic decision-making, allowing true collective intelligence to emerge. Beyond credibility-weighted decision-making, Dalio's other major contribution is systems thinking. He sees the world as a vast machine, where everything is interconnected and mutually influential. That's why analyzing problems requires going beyond surface symptoms to uncover deeper drivers and internal logic. This approach led Bridgewater to develop its famous all-weather strategy. Through deep analysis of historical data and economic mechanics, Dalio realized that no matter whether the economy is expanding or contracting, experiencing inflation or deflation, some asset class will perform well. So instead of predicting the future, why not build a portfolio that performs across all environments? The all-weather strategy allocates across stocks, bonds, commodities, and gold, adjusting based on each asset's risk contribution. This is not prediction. It's a deep understanding of reality and alignment with how systems actually work. To trace the real beginning of Ray Dalio's philosophy of embracing reality, we have to go back to 1971. That year, President Richard Nixon suddenly announced that the United States would suspend the dollar's convertibility into gold, ending the Bretton Woods system. At first, the young Dalio, like most people, thought it would be a financial disaster. He expected the markets to crash when they reopened on Monday. But reality hit him hard. The stock market didn't collapse at all. The Dow Jones actually surged about 4%, and gold prices rose along with it. The experience stunned him. It was painful, confusing, and transformative. That pain forced him to step back and ask, "Where did I go wrong?" Instead of relying on emotion or instinct, he went back to history, studying what happened in the 1930s when the US abandoned the gold standard. He realized this wasn't a temporary policy tweak. It was a structural break. When a country carries excessive debt and runs out of conventional solutions, the monetary system inevitably gets reshaped. For Dalio, this was not a trading victory, but an awakening. What truly matters isn't how authorities explain reality, but how systems behave under pressure. That awakening became the real starting point of his debt cycle theory and his lifelong habit of systems-based thinking. So what does Dalio's philosophy teach us as individual investors? First, stop blindly predicting the market and start embracing reality. Acknowledge uncertainty and focus your energy on understanding the fundamental mechanics of how things work. Second, treat every mistake and every market swing as a valuable learning opportunity. Don't run from pain. Face it, reflect on it, and extract the principles that belong to you. Finally, build your own decision system. Whether you draw inspiration from Dalio's credibility-weighted decision-making or design your own analytical framework, make sure your choices rest on reason, objectivity, and principles, not emotion or herd behavior. Remember, investing is a marathon. Evolution is the eternal theme. Dalio's evolution through pain is both investment wisdom and a philosophy of life. It teaches us how to stay clear-headed in uncertainty and how to keep growing through setbacks. Thank you for watching. If this perspective resonated with you, consider subscribing for more explorations into timeless investment thinking.